Welcome. Welcome, everyone. It's Angela Robles. If you're watching live, it's Tuesday night, a little earlier in the evening than most of my lives. There's something that always been thinking about and started to work on this summer in terms of content for written video and my programming, and needed to have some conversations around the world with rising gen and principles. It's related, and this is going to be a deep one. I think I actually have some of my best quotes and content in this one. Why your children won't inherit the family office that you built. And don't be limited to think that this only applies to my main bread and butter, the single family office community. This applies to any business, it applies to MFOs, and the big picture in general is going to be applicable to effectively everyone. And again, I think I have some really good content here. So without further ado, why don't we get to it? Maybe I could actually retitle it The Last Generation. And again, why your children won't inherit the family office you built unless you transform it now. So there is an uncomfortable question that I often like to ask, especially the elder or the founder that created the wealth and usually the family office. What happens to your family office when you're gone? Simple. Not the wealth, the assets, however we may define it. Actually, not even really the family office itself, possibly the institution of it. What happens to the operation you built, the systems, the team, the strategies? Like, who takes this over? Your children? Gen 3, in my example, heirs? Carefully groomed successors? But there's a brutal truth that, to me, no one is really saying out loud. If your family office looks like now in 2025, like it looked in 2015, just 10 years, your children, grandchildren aren't going to inherit it. They're going to dismantle it. And no, it's not because they're ungrateful, not even because they're reckless. They're probably not. But because the family office that you built, and really applies to many different things, no matter how successful it's been, will be fundamentally incompatible with the world that they're operating in. So what should terrify you, business owner, doesn't need to just be a family office. This isn't really a 2035 problem. It's happening right now. I'm going to give you 3 scenarios, and then we're going to do a very, very deep dive. What I call the departure. $4.3 billion family office, third generation heir. Might be a little off on this one. 32 years old, Harvard MBA, worked in the family office for a couple of years, and then this summer effectively quit. Not even to start his own venture, but to join a much smaller, actually, it was more of a hybrid multifamily office. Why? They have AI native operations. They can learn more in 2 years than they learned in the family office, having some engagement for perhaps 10. Being stuck in a 2010 mindset, and really no one wants to admit it. Patriarch, kind of devastated, built something incredible. But the successor in this example, choose a different one, a better learning environment, arguably better to get away from, you could call it dad, and the technology sophistication in the operation chose really dad over legacy. Now imagine another, the ultimatum. I don't know. It's a little late at night. I had too much coffee. $7.8 billion family office, Gen 2, 68 years old, planning succession, daughter 41, really incredibly talented, CIO in training, another ultimatum. And again, wanting a different mindset from investing to thinking to processing information, problem solving, and AI. They're not going to manage a family office that they believe is fundamentally disadvantaged comparative to peers. The patriarch thought they had a succession. Many of us do. Turns out the successor won't accept what was built, not because it's bad, but because it's kind of obsolete and not where things are headed. Another one, a $2 billion family office. Ooh, more common here. Founder passes away. Gen 3 heirs inherit, all in their 30s, all successful in their careers. Here's by far and away the most common option. They vote effectively to liquidate the family office, move everything, you MFOs are going to like this, to a talented multifamily office and go about pursuing their own interest. Why? Because they look at the operations, employees, workflows, manual processes, and say, yeah, like this made sense for the elder generation. It doesn't make sense for us. They could get better returns, their perception, better service, more optionality by partnering with a modern operation. Imagine spending decades building and running the family office, and it lasts what, at most 6 months after death. So 3 different outcomes. But look at the same root cause. The next generation doesn't want the family office you built. They want the family office that should exist, looking maybe a little future forward, let's call it 2030. And if you don't build it, they will leave, refuse to take over, or simply dismantle what you created. And no, it's not AI for AI's sake. That would be stupid. Am I allowed to say that anymore? This is about institutional survival. This is about whether your family office exists in 10 years in 2035 or becomes more of a cautionary tale. So this is about why your children won't inherit the family office that you built and what you need, maybe why you need to transform before it's too late. So we'll call this part 1, the generational divide. And let me show you the divide that's tearing certain family offices apart. What you built versus what they expect. You built your family office in a world where information asymmetry was your competitive advantage. Stay with me. Relationships and network access mattered most. Patient capital and long-term horizons were differentiators. Expertise was kind of scarce and expensive. Human judgment, we're going to come back to that one. Human judgment and experience drove decisions. Traditional 40-hour weeks, 9 to 5 operations. That world to be excellent no longer exists. Your children, maybe your grandchildren, for some of you, maybe your great-grandchildren, are living in a world where information is far more abundant. Asymmetry is kind of vanishing. Technology and speed matter as much as relationships. Markets move faster and kind of the opportunities compress. Expertise has become democratized. Boy, I'm sorry. 4 cups of coffee, in case you're wondering. I am wired up. And AI augmented. Data and algorithms increasingly drive decisions. 24/7 global operations are now expected, not even really exceptional. Now, again, putting myself in the other shoes, I get it. You're not necessarily wrong. Just simply, yes, the world has changed. And here's the part that kind of creates the crisis. You succeeded in an old world. Everything you built worked, or it felt that way. Your strategies generated returns. Your processes made sense. Your team delivered results. It's hard to change when you have A lot of that going on. I could argue low expectations, but I'll be nice because your children are comparing you. So why the change? Your children are comparing you to the wrong benchmark. You're benchmarking against how you performed historically. They're benchmarking against what's possible like right now. So there is a talent drain. I see it that I don't think people in the community are talking about enough. What's happening that I think most matriarchs really don't see? The best people are moving, leaving. Not always because of compensation, but that could absolutely play into it. Not because of culture, because they're bored. They're watching peers in more active family offices, more AI centric, so they could focus on bigger problems. A small team of Spartans could beat a big army. You can't afford to lose incredibly talented people. Imagine building AI agents that transact autonomously across global markets. That's not 40 hours a week, that's 168. Creating predictive models for geopolitical risk could save tens of millions. I've been talking about the last couple of days designing stablecoin treasury systems that operate 24/7, developing sovereign AI architectures that competitors can't penetrate, solving problems that kind of didn't exist 5 years ago. And by the way, your superstars, I don't care what others say in the family office world, are more valuable than they seem. More valuable. So they come to your family office where what? They're manually updating Excel spreadsheets, reading earnings calls that came out maybe days ago, attending weekly meetings to discuss things that probably should be automated, and doing work that feels like it should have been solved maybe years ago. That is not going to engage the rising generation, and that is not going to attract quote unquote superstars. The gap isn't about prestige. It is about, I've been noticing this with people, intellectual stimulation. Top talent, more so especially younger talent, doesn't want to work on solved problems. They want to work on the frontier. They're talented. They're ready to go. They're more capable than you think. Stop treating them like little kids. And if your family office isn't on the frontier, if they're talented, they're going to find one that is. CIO mentioned last month, we lost our best analyst to a family office, smaller. Maybe that appears to be a common trend because they're building AI systems, they're tackling problems that are exciting and thrilling and really big picture. And the AI is doing great on some of the workflows and other things, providing more resources at the fingertips of the talented humans that can help make decisions. Like, this is what they want. This is the future. You're not competing for talent as much with traditional family offices. I'll give you that. You're competing with more modern AI operations that offer fundamentally more interesting work. I'm not going to be quiet about it. I have a moderately good global reach. We're at the early stages. This is going to accelerate. So the relevance crisis. Now, there's a deeper issue. It's not just talent. It comes down to purpose. Ask yourself, what is your family office for? 20 years ago, I think the answer was pretty clear. Access to deal flows others couldn't see, expertise that was expensive and rare, patient capital when markets were impatient, sophisticated tax and estate planning, privacy and confidentiality, bespoke services your families couldn't get elsewhere. I don't know. Maybe to people like me now 60, that actually sounds pretty good. But again, you're trying to keep something to be excellent in your family, your business, your family office, even your MFO. Today, and by the way, MFOs are going to bleed when the rising generation takes over and is not happy with them. Ask your Gen 3 heirs the same question. What is your family office for? The answer may shock you. Listen, I got a good one here. I can access venture deals through AngelList. I can get sophisticated analysis through AI. I can hire experts on demand globally. I can get tax optimization from specialized firms. I can get privacy through legal structures. The question isn't, what is our family office for? The question, maybe my biggest point here, why do we need a family office? Can't believe that's coming out of my mouth, but stay with me. This is an existential crisis. Your family office made sense 20 years ago because the services provided were unavailable elsewhere or wickedly expensive. In 2025, many of those services are commoditized, democratized, AI augmented to a point where a single family office can't compete per se, always exceptions with specialized providers. So what is left where the single family office could be awesome? The only sustainable advantage is speed, and that does matter. Customization, that really matters. And integration that you can't get elsewhere. AI could absolutely, properly done, augment and give you that. Traditional operations, they usually don't. Without AI, your family office is more of a high-cost provider of increasingly commoditized services. With AI, your family office is a competitive weapon, creating sustainable advantages across every dimension of wealth and wealth management. I think your children and grandchildren, etc., they see this kind of clearly, and young, up-and-coming, incredible talent. But do you? So kind of a part two, the 5 pillars, transformed. Let me show you how AI doesn't just improve family offices. I know you're getting a lot of that from me this week. It transforms their fundamental purpose. Family offices exist for 5 core reasons, and AI is going to be impactful right now, not 5 years from now, right now to all of them. Wealth preservation. Traditional wealth preservation is more defensive. Don't lose money. Not a great attitude, by the way, to teach a rising generation. Protect what you have. Manage risk. Now, that may make sense. Stay with me again. When threats are visible and slow moving, market crashes you could see coming, regulatory changes that took years to implement, geopolitical risk that unfolded in months. Today, you're kidding me. Threats move at internet speed. A regulatory announcement in Europe at 6 p.m. on Friday can wipe out tens of millions in certain portfolio value by Monday morning when the markets open back up or your team is up and running, if it's not been hedged. A geopolitical event in Asia can cascade into your supply chain investments before American markets open. A competitor can use AI to identify, exploit your strategic vulnerabilities faster than you can defend them. Traditional wealth preservation, quarterly risk reviews, annual strategy updates, reactive hedging, for the most part, is just simply obsolete. At minimal, it is not optimal. If you're going to have a family office, have it to be incredible. The benchmark is relatively low from mediocrity. AI native wealth preservation is active defense. A family office with significant exposure to commercial real estate debt across multiple continents. Traditional risk management, again, quarterly stress tests, annual portfolio reviews. AI, continuous monitoring of 200 plus risk factors, interest rate movements, occupancy trends, compliance, tenant financial health, local economic indicators, competitive supply additions, regulatory changes, all relatively simple with AI and AI agents. So imagine then detecting a pattern. 3 separate markets showing early distress signals that historical models would cascade, like 3 or 4 months. The signals were too subtle for most human analysts overburdened to spot. Shifts in lease renewal rates, tenant payment timing, local employment data that individually meant nothing, but together that may suggest trouble. Hedge the exposure across all markets, cost for that, sure. But today's world, all three markets, imagine in distress. Without hedges, protected losses could be tens of millions. With hedges, much less. That could be a significant savings. But here's what matters. No human analyst would have spotted that pattern. I don't think so. The signals were too distributed, subtle, and early. That's not better wealth preservation. That's a different category of protection. Your children inherit a world where threats move faster than human cognition can track. Without AI augmenting your incredible humans, your talent, you're not preserving wealth. You might be getting lucky. Pillar 2, return generation. For 50 years, generating returns was about access, relationships, and judgment. You knew people. You got in deals others couldn't access. You had experience recognizing good opportunities. You had capital when opportunities appeared. That model is dying. Not dead, but it is dying because information asymmetry is collapsing. The edge isn't necessarily the information because everyone could have that. The edge is in processing information faster and seeing patterns, what AI is really good at, that others miss. It doesn't just give you better access, it gives you better, effectively, pattern recognition. Imagine a family office focused on industrial technological investments. Traditionally, evaluating maybe 200 or 300 opportunities annually, having deep relationships, hard earned, with entrepreneurs, a strong thesis on industrial automation, and likely in the past, good returns. But now, with AI, and very possibly the same team doing more, better, faster, possibly with less. It's a powerful combination you're not going to beat. Now monitoring thousands, maybe 12,000 industrial technology companies globally, not just the ones pitching them, but every company in their investment universe. Their AI tracks patent filings, hiring patterns, customer reviews, supply chain relationships, founder backgrounds, exits, competitive positioning, technology trajectories. Now, that result over 18 months could be identifying multiple, let's call it 24 opportunities months before those companies even start to raise capital. I spoke a little bit about this in the 4 video segments 1 through 4, mainly 3 that I shot on Sunday and are still up on my platform for now. This isn't because they had better relationships. It's because they had better pattern recognition. They approached these companies before competitive fundraising processes began. They offered strategic partnership, got preferred terms, and like preferred terms, probably a pretty significant valuation discount. That matters. What's critical, this isn't about working harder or smarter. All good things. It's about seeing opportunities that are somewhat invisible without computational pattern recognition. Your children will inherit a world where the smartest human analyst, maybe we're not quite there yet, but it's going to work a lot longer, that 168 hours, but inherit a world where the smartest human analysts can't compete with at least AI augmented competitors. The question isn't whether AI helps. The question is whether you can generate exceptionally competitive returns without it? I would argue no. And no, I'm not talking 2030. It's not going to work. Not against AI native competitors, at least those that are doing it right. Pillar 3, sophisticated services. Family offices pride themselves on providing sophisticated tax, legal, and estate planning that often the families possibly can't get elsewhere. But again, we go back to the uncomfortable truths. That sophistication is increasingly table stakes, not what's really different and separating. Every sophisticated family office has access to top tier advisors. Everyone has estate planning experts. Everyone has a legal counsel. What makes it different isn't having sophistication services, it's having predictive, protective, more proactive, continuously optimized services. Imagine a multi-jurisdictional family with beneficiaries in 7 different countries. Traditional tax optimization, annual strategy meetings with advisors. They'd review structures, make adjustments, implement changes. What's the problem? Tax law changes globally all the time. By the time they implemented annual recommendations, some were already suboptimal due to regulatory changes that they probably didn't anticipate. With AI, you could continuously monitor tax law changes across targeted to these multiple jurisdictions. The AI reads, as you set this up, every regulatory update, models impact on their specific structures, and generates optimization recommendations in real time. Guys, I know I've been pounding this for the last couple of days. Sometimes you got to hear something 10 times before it really sinks in. Imagine an AI identified 17 separate tax optimization opportunities that emerged from mid-year regulatory changes. Average time from regulatory change to AI recommendation, like 6 days. Average time from regulatory change to traditional advisor notification, months. Total additional tax savings from acting fast on those opportunities could be millions of dollars. But it's not just speed, it's complexity management. Often you'll come across these family offices, they have dozens of 40, 50, 60 entities across multiple jurisdictions with cross-border flows, multiple trust, operating businesses, investment vehicles, and philanthropic structures. Complicated stuff. The combination of that complexity of optimizing across all variables, it kind of exceeds human cognitive capacity. Maybe you got Einstein's on board. I don't know. The AI models could structure 10,000 different scenarios all the time, 24/7, finding optimal structures that humans would likely never consider. Just because they can't process that level, that volume, that complexity. Your children are going to understand this, and they won't accept sophisticated services that are more reactive and annual. They'll expect intelligent services that are proactive and continuous. Pillar 4, and I think an underrated one, family governance. Now, this is actually where it could create, in some ways, the most value. You didn't expect that. Why? Because family governance is messy. It's emotional. It's political, for sure. Family offices will tell you, depending on the size of the family, sometimes that could be the hardest part of family office management. Traditionally, family office governance structures, family meetings, facilitated discussions, and hope everyone eventually aligns. Spend years on governance charters that, of course, no one follows. AI doesn't make governance less emotional, but it could make conflict less destructive. Imagine a 4-generation family, easily could be 28 beneficiaries, constantly arguing about risk tolerance. Older generation wants preservation, younger generation wants growth. ESG investing, Gen 3 demands it, Gen 1 thinks it's a performance drag. Distribution policies, some need liquidity, others want reinvestment. Succession planning, who's competent to take over? All things that are going to be guaranteed to lead to trouble, I promise you. Meetings could be brutal if everyone is open and honest and doesn't legal up. Decisions could take months, relationships were strained. With AI, you could build a governance modeling system. It doesn't make decisions, but listen to me, it models outcomes. Before any family meeting, the AI could run scenarios. We adopt this distribution strategy. Here's the impact on each beneficiary over 10 years. We allocate 30% to ESG. Here's the projected return impact with confidence intervals. If Jane takes over as CIO versus an external hire, here are historical success rates for similar transitions. The AI doesn't necessarily say what's right, but it does show what's true. Now, let's go here. Something remarkable happens when family members see objective data. Instead of arguing opinions, conflicts become less personal. They're depersonalized. It's not, I think we should distribute more versus I think we should reinvest. It's here's what distribution scenarios look like modeled across everyone's situations. Which outcome do we collectively prefer? You'll find family meetings could go from lack of structure and bickering over multiple hours to sometimes 2 hours. Data-driven discussion, time to major decisions could often be dropped from months to weeks. And again, in many things in life, speed does matter. Now, I'll even share what I believe to be an unexpected outcome. The AI identified distribution policy that worked better. How about better for all of the beneficiaries than any policy any single person had proposed? It was a solution in a possibility space that humans hadn't explored, partially due, we're busy, time, complexity, and modeling something like that manually may have been, if not impossible, overwhelming. Don't forget, your children will inherit not just wealth in all its forms, they're going to inherit the family dynamics. If you give them tools to manage those dynamics productively, you preserve family unity. If you don't, you'll watch the family fracture over what often is, and here's the sad part, solvable problems. Pillar 5, optionality. This is the pillar nobody thinks about. Maybe it matters the most. The purpose of generational wealth isn't just preservation and growth. It really is more optionality. Think about it. Creating possibilities for future generations that wouldn't exist otherwise. No, I could say maybe AI doesn't create optionality directly, but it creates, if done right, conditions where optionality emerges. Imagine a family office with substantial agricultural land holdings across multiple states here in the US. For 30 years, the strategy could have been pretty straightforward. Hold land, collect rent, benefit from appreciation, conservative, stable, kind of boring. Well, sometimes boring is good. With AI, you could start analyzing adjacent opportunities. The AI identified that their land holdings had unique characteristics. How about solar irradiation levels above a regional average? proximity to transmission infrastructure, water rights. As I'm looking at ranch land and things like that, that's an interesting one. Water rights that hadn't been utilized. How about soil composition suitable for carbon sequestration projects? Location near an emerging data center development. I could go on. Individually, I don't know, maybe none of those things mattered. But combined, they create a novel optionality. What if they developed solar farms on portions of the land, sold power to the data center? I'm using a really great, easy example. Used the carbon sequestration to generate offsetting credits, maintained agricultural use on remaining acreage, and structured it all through a new entity, that maybe could even raise outside capital. That structure didn't exist. It just didn't exist in their traditional playbook. It required seeing patterns across energy, agriculture, technology, carbon markets, and capital structure at the same time. Now, that boring agricultural holding can now be a multi-revenue stream operating businesses, who knows, generating 3x, 4x the returns of traditional agricultural rent, while still appreciating his land. Importantly, maybe more importantly, they created optionality their children can build on. Is this making more sense now? One heir can now be developing a career in regenerative agriculture technology, another exploring solar plus agriculture business models, and a third studying the carbon markets. So the wealth didn't just grow. It brought the family closer together, created opportunity for a rising generation, really career paths and opportunities that, in my example, didn't exist before. So your children don't just inherit wealth, they inherit possibility space. AI, no doubt, expands that space into dimensions that you can't see without it. Now, is there a part 3? The extinction events. Let me show you 3 forces that will make a traditional family office extinct, whether you like it or not. Here's what's happening that most people don't see. New family offices are launching. I know, I'm a part of it, helping to structure them. AI native from day one. They're not retrofitting AI into traditional operations. They're building these operations from scratch. Imagine a family office launched this year, $1 billion, no legacy systems, no traditional workflows, no organizational inertia. Imagine an entire operation, AI-powered deal sourcing across global markets, utilization of what I spoke about this weekend, stable coins and AI agents, and effectively operating trading 24/7 around the world, autonomous risk monitoring 24/7. Like I just said, tokenized treasury management with stablecoin execution, sovereign AI infrastructure built from inception, and a team of 4 incredible humans orchestrating the AI systems instead of often a less efficient 12, 15 people, in my example, doing manual work. That operating cost, in my example, relatively nominal compared to traditionally what it could have been. Maybe a third of the cost with better performance, more connectivity, more data points, more opportunities for the families to make better decisions. Now, here's what matters. Imagine not having to convince anyone. They didn't have to overcome internal existing resistance. They didn't have to retrofit AI into existing systems. Imagine just starting it correctly. Imagine what SFOs and MFOs, your entrepreneurial endeavor, what they could do. These AI native competitors will eat traditional family offices alive, not because they're smarter, because they're structurally superior. Your children will be competing. Your MFO will be competing against family offices that started with advantages that compounded, that you can't replicate unless you transform. Extinction event number 2. I'm actually standing up for the multifamily office community. I can't believe it. There's some really good ones. Multifamily office evolution. The big multifamily offices, I see it. They're surprising me. They're transforming faster than single family offices. I mean, why? They have the scale, shared cost, client pressure, sometimes forcing evolution. Top MFOs are investing big money, real money, into AI infrastructure. I'm working with one now. They're building proprietary systems that many single-family offices can't match. And they're offering these capabilities to clients. What happens? What happens when your rising generation, your children, let's call it? Option A, run the family office we inherited with traditional operations. Option B, partner with an MFO that has AI native capabilities, lower cost, better service, access to deal flow that we couldn't access. Option B starts to look really attractive. That's what happens. And once families start moving to sophisticated MFOs, and I don't want to see this, single family offices become endangered. It's unacceptable to me. The only single family offices that survive are the ones that are even technologically superior to MFO offerings. Without AI, that can't be. Now, the good news for many of you, most MFOs are terrible. So SFOs, don't worry too much yet, but you're losing some ground. Extinction event number 3, regulatory and tax complexity. The complexity of managing wealth is accelerating beyond human cognitive capacity. I mentioned earlier, cross-border tax law, digital asset regulations, tokenized frameworks, stablecoin compliance, AI governance, privacy regulation across jurisdictions, ESG reporting requirements, beneficiary ownership, transparency rules. It's getting harder and harder. This complexity used to change annually. Now it changes monthly. Who knows, soon weekly. Managing this complexity without AI will effectively become impossible. Not just difficult, impossible. Family offices that try to manage this manually will make catastrophic mistakes. They'll miss regulatory changes. They'll violate rules they didn't know existed. They'll pay penalties for noncompliance that simply they couldn't track. And you're giving this to your kids, your rising managing partners in an MFO, really any company. The children in my example are inheriting this complexity. You can give them the tools to manage it. You could, or you can give them a ticking time bomb. Part 4. Man, I'm really feeling this one. Part 4, what transformation actually means. So what does it mean to transform your family office into something your children want to inherit? Now, it's not about technology for technology's sake. I'll give you that. It's about really institutional level evolution. Going from static to dynamic. I mean, come on. Traditional family offices, for the most part, are rather static. Annual strategies, quarterly reviews, investment theses that persist for years, way behind the times of certain activities that have been happening, like broadly speaking, the last couple of years in AI, including investing. AI native family offices combining incredible humans with AI are dynamic. Continuous optimization, if done right, real-time adjustments, strategies that could evolve daily based on new information. Your children do not want to inherit a static institution. They want to inherit a dynamic organism that adapts faster, faster than markets change. And a lot of them have the talent and the capability, with maybe some of the right mentoring, to be able to do that 100%. Think about from labor to leverage. Traditional family offices scale linear. You want to analyze more opportunities. What do they say? Hire more analysts. Want better tax optimization? Hire more advisors. Want to expand if you're an MFO geographically, a different geographic setting? Open more offices. AI native family offices can scale exponentially. The same team may handle 10x the volume. The same overhead delivers 5x the sophistication. Same footprint operates globally. Your children don't want, trust me, like they do not want to inherit a labor-intensive operation. They want to inherit a leverage-rich platform. Now, luckily for all of you, there's no football on tonight, so I guess I'm not too distracted. From opaque to transparent, traditional family offices run on institutional knowledge. We've always done it this way. Trust me, this works. This is how we analyze deals. AI native offices run on documented, repeatable, improvable systems. Every decision effectively has an audit trail. Every strategy has measurable outcomes. Every process can be questioned and improved. Your children don't want to inherit tribal knowledge. They want to inherit systematic intelligence. I think here's an important one. We're just about there at the end. From closed to networked, traditional family offices are fortresses: privacy, confidentiality, self-sufficiency. AI native family offices, younger and dynamic, are networked. They share often resources with other families. They co-invest. They build sometimes shared infrastructure. They collaborate while maintaining competitive advantages. I see it when I travel the world. Doesn't matter here in the US, the Middle East, LATAM, Europe. Your children don't want to inherit the isolation. They want to inherit connectivity. Now, what I may call a part 5, the decision. So here's the decision that you're actually making. It really isn't, should we implement AI? It's, what are we leaving for our children? For those of you in an MFO or other structure, it may be the employees, the rising partners. Are you leaving them an institution they'll feel obligated to maintain, but secretly resent? That happens all the time. An operation that's already obsolete and getting more obsolete daily, a structure that they're going to dismantle because it doesn't serve them. Or, like I have stated, are you leaving them an institution they're proud to inherit and excited to add, to build upon? An operation that's on the frontier and creating sustainable advantages. A structure that adapts to their world instead of fighting it. That decision is being made now. It's being made every day. Not by what you'll say or what you say you'll do, but by what you're doing, like right now, this quarter, before the end of the year. If you're not actively transforming your family office, and it's deeper than just more of an AI native operation, it's deeper than that, then you are making the first choice I noted by default. And your children, again, never forget this. The rising generation inherits the consequences. Maybe in closing, there is kind of a legacy question. I've spent, a good part of the last 50 minutes telling you why your children, and again, you can extrapolate that to partners, rising managing partners in an MFO, a lot of different type of entities. It still applies. They They won't really inherit the family office in my example you built, but here's a hopeful version. They will inherit a family office, just not the one that exists today. They'll inherit one that you're building now, one that's designed for now, for looking forward for 2030, not for 2010. One that gives them competitive advantages, not legacy burdens. Or, I don't know, they'll inherit nothing because the family office you have today, over time, is probably going to lose. It won't survive in the format that it's in now without this transformation. Yes, I think the choice is stark, and I absolutely feel the timeline is compressed. The stakes absolutely are generational. Now, I have mentioned, because I'm very active this week, heading into next week, November 5th and 6th in New York City, I have about 10 families, spots for one or two others in my AI masterclass. You're an SFO, an MFO, an entrepreneur. I could change your life. You're an executive. You're going to be employable. You're going to learn things. You're going to build sovereign AI, vibe coding. You're going to create apps. You're going to see how to integrate and actually use and create there on the spot AI agents and put all of this together. And I have the most incredible instructors in the world along with me. They're awesome. I'm okay. The families that show up are asking that question, what will our children inherit? And the answer is something worth inheriting. Like, what is going to be your answer in terms of much of this? Again, I've been on this for, by AI standards, a very long time. I am shocked that I look behind me and there's like no one. Oh, there's a couple of others poking at it. Some I have great respect for and bring some knowledge to it. I ran with this at the latest by early this year, buying the hardware, experimenting, building apps, having a sovereign system, using AI agents, learning what works, what doesn't work, meeting an untold number of AI integration engineers, traveling to Europe and Silicon Valley. I don't know, spending a lot of money, that's for sure. And bringing you already multiple masterclasses, hands-on immersive on how to do it. And now it's even better. And now you could wrap up the year, November 5th and 6th, getting such a head start. You could absolutely be implementing this before the year even ends, and you will really, really be ready for 2026. You're an MFO, I got you covered. You're an SFO executive, a family member, a rising generation family member. You want to send a second person? Absolutely. We want to make it happen. Next week, depending on the time frame you're listening to this, November 5th and 6th in New York, go to my website, angelorobles.com, or reach out to me directly. I get it. It's not cheap. You get what you pay for, the quality of what I bring in my faculty, and the ability for you to begin, and the amount of time that I'm saving you. And some families spend millions of dollars. I gave good examples of that yesterday. I think I still have that up on LinkedIn and YouTube. Millions, and don't do anything with it. And it becomes a waste. I started with an under $10,000 laptop, my own open source systems, and I built agents and vibe coding on that, and they work pretty incredible after some trial and error. I could do it, you could do it. Broadly, the things I spoke about today, the engagement with the rising gen, the future of the family office, the world in turmoil, geopolitical, national debt, deficits, political bifurcation like never before, governments failing, seizing assets and resources, lack of personal freedoms. Like, there's so many things going on, all things that I enjoy to cover, that I have a level of intellect and resources and capability and have an incredible global network. It's more than just get a second passport, own physical gold, store it in Switzerland, and have some Bitcoin and you control the keys. All those are little parts of it, of course. but it's far deeper than that. So it's more than just AI, but AI is going to be impactful to everything. Geopolitically, macroeconomics, investing, governance that I noted, there's nothing that won't be touched and altered forever. And it's happening right now. And I want to lead that charge. I want you to join and be a member. Go to angelorobles.com, become a member, join and participate in that masterclass November 5th and 6th. I may not do another group one until well into the first quarter. Now, what I will do, and I'll talk more about this after next week, some of you, Angelo, even if digital, but me in person, could you and the dream team come to our entity, our MFO, our family office, and for a couple of days with all of our team, just work with us? Yes, that will be more than the masterclass price, but sure. And that probably is overall more profitable to me. But there's a value in the people you meet in the group settings, your peers, and learning and sharing together, them asking questions maybe you didn't think of. That shared knowledge, that sense of community is very valuable in and of itself as well. So this will be a very, very busy towards the end of the year. I have incredible content coming out, one-on-ones with families, breakfast and lunches I'm hosting from New York to Miami. Become a member and be a part of it. And then the first quarter next year, man, I got my marquee program over maybe 7 days, at least 4 days. I like to go to Palm Beach. It's in Palm Beach in March. Like, this is it. This is the time to be one of the 100 members. The time for something special. Aren't you tired? Even if you're a provider listening to this, are you tired going to an event, mediocrity of content, too many service providers in the room, panel after panel, moderator can't control often the one panelist who only cares about selling their own services, not even providing an inkling of content? That's because they're paying $7,500 each, making it a $22,000 plus panel. It's money, money, money. Not enough break time, not enough networking, not enough of a vetted room, and not enough real content that could be impactful and make a difference. When you have lots of people in the room, it's hard to do that. When you want to run a conference company that can make you a 7-figure annual earner, that might be a good business. Running a membership model is not the best business in the world if you look at it strictly from a financial. I love what I do. I'm obsessed by it. There are more profitable things in the community I could do, but I won't love it the way that I love what I do. Proprietary content, deeper thinking, problem solving, incredible families, peer sharing, select incredible thought leaders, and building around AI, around rising generation, around creating a top 1% family office, addressing geopolitical issues, sovereign risk. These are the things that I love. And I would love for you, get off the fence, jump on board, be a part of it. If you don't go to angelorobles.com, email me, angelo@angelorobles.com. That's not so hard. And like I almost always say, there's one day where I'm probably going to stop saying this. I do get some interesting text. Reach out to me. Text is fine, 203-570-2898. Like I noted in the last couple of days, for some of you that may go to angelorobles.com from a corporate server or Wi-Fi with maybe a Cisco firewall, there's one other brand too. We're trying to get it corrected. It may be a bit of an issue. That's going to be a small percentage. It's probably down to like 2% now. But you could email me. You could text me. You could be creative and simply DM or find a way to reach me. And we're working on a bit of the issue as I described it for some of you behind more quote unquote corporate walls. At the end of the day, you know how to reach me. Next week, the AI Masterclass will be incredible, and there's so much upcoming between now and the end of the year. I appreciate all of you. I could learn from all of you. You all have something to teach me. I greatly appreciate it. Some comments have come in. Well, EH, it looks like. Boy, you think of some of that stuff that I do. I'm reading off a little part of it partially to myself. The trajectory is concerning. Some of the elites you mentioned think that AI can solve, do you say that communication, or is that communism problem? Uh, uh, yeah, now you bring up a whole bunch of other issues that are deep discussions that I love to talk about. I talk about them at events. I have open debates at events. Those are interesting. I did one relative to Mamdani running for his role and likely winning next week when I had my New York event. So yes, there is massive political bifurcation. There is an absolute rise of socialism. We're going to see it in New York, and I believe, what is it, St. Paul in Minnesota. There is grave challenges. Where's the money going to come from? Where? If you have businesses, entrepreneurs create businesses, they pay taxes, they employ people. Look at who pays the majority of taxes. Now you're encouraging them to move, maybe neighboring, one of my states, Connecticut, maybe Jersey, obviously Tennessee, Florida, Nevada, Texas, and others. When you have smart people that take initiatives, that took risk, that build companies, and then they move, what's going to happen to the tax base? Where's the money going to come from to pay for all these services? Some of it relates to supply and demand. I would love to have a $50 million home in Beverly Hills. The supply and demand dictates that I guess I'm not going to be able to do that. That's on me. I guess I don't have enough utility in the world relative from a business perspective to what I do to create companies and value in resources to earn more money. It simply is supply and demand. Take responsibility, be accountable. I am going to cover that subject probably over the weekend, a little bit of an overview relative to quote unquote Mamdani. I do enjoy covering subjects that apparently no one else in the family office world covers. I don't want to be in an echo chamber. At my event, I said those that kind of agree with some of my comments, I actually prefer you keep quiet. I want to hear from the others because I want to learn. I'm not looking to beat them. I'm looking to learn. I don't have all the answers, and I make a lot of mistakes. Hopefully, I learn from them. So, got a little off track there, but the comments coming in on yeah, let me see if there's any more comments. Subjects that I'm not afraid to tackle, but that does get us off a little bit of the AI. And of course, what happens, I talk about AI for 53 minutes, and then I talk about geopolitical and some other topics, and the number of viewers rise. The reality is, AI is not yet something that a lot of single family offices, ultra high net worths, and MFOs, they're intrigued from afar. They're not really ready to jump in and take action. That gives those that are an incredible edge, not just linear or 5 or 10%, but a multiple. You have to do it right. You have to take the actions. But I don't know, the more I talk about AI, the more the viewers go down. The more I talk about some other subjects, the more that the viewers go up. But AI is what we're here to talk about. It's been kind of an AI week beginning on Sunday. And again, next week is my big masterclass. I will be doing some other videos this week that won't involve AI as much. I got one I'd like to do about my experiences in it's quantitative and qualitative on what defines the top 1% family office. So I'm going to start that ball rolling this week. I do have a masterclass upcoming in 2026, digital and in person, about that. I got over 400 beautifully designed slides, way better than the variation I had about 2 years ago, because so much has happened, so much more that I learned. And yes, AI is going to play a part of that. That's a big difference from, say, 2 years ago. So there's lots of incredible content coming up. I appreciate all of you. Reach out to me, keep in touch, follow me on @FamilyOffice on YouTube. I'm not quite as active on X, but I encourage it. Very active on LinkedIn. And again, go to the website, email, reach out to me. You know how to do so. And probably one or two of you watching or listening to this live or a recording, if this week and not too late, heading into after November 5th and 6th, are going to reach out and inquire and maybe to simply sign up and join for that AI masterclass. I will make an impact. Thank you. Have a great night, everyone.